Good morning, everyone, and welcome back to Craw. Let's jump right on in. So, usually our content is geared towards day traders, those that take intraday positions in stocks. But today is going to be a little bit more about long-term investors, right? So, buy and hold investors. So, today we're going to focus on Apple. So, here on my screen, we have WWDC 20, right? So, this is Apple's worldwide conference. They use this to introduce new products, to um, give insight on their business, and really just give you, it's more of like a State of the Union address, if you will, for Apple. And so this conference is in session. And if we scroll down, we can see that, we have a new OS for the phone, for the iPad, for the watch. I mean, just this is for them to announce different things that's going on, right? But one of the key things that was announced is this. And I'll zoom in so this is crystal clear. So as you know, Apple produces many products, some of which have processors in them. And Apple has stated here, right? So there's two main processor or computer chip companies. There's Intel, and then there's AMD. Now, as you know, we trade AMD a lot because it has a lot of great volume, a lot of volatility, and it's really easy to get in and out with considerable share size. So this is the New York Times. This is not a typical news outlet that we use for stocks, but it's very applicable. So Apple, have it highlighted here, Apple is going to ditch Intel in its MacBooks. Okay? So when you think about a company switching suppliers, the first thing you should think about is, okay, so Intel, the first thing I thought about was that, okay, Intel is going to lose part of its revenue, right? Because Apple buys these Intel chips for their MacBooks. But if Intel is not going to be selling them to Apple anymore, then they're going to be losing some revenue, right? I hope that makes sense. Now, you'd have to get into the fundamental analysis to understand how much Intel makes off selling chips to selling chips to Apple for the MacBook. What I've read and researched is that it's only 3%, so not a huge loss to Intel. However, let's see what the market thinks about that. So let's scroll down. So this article was released June 22nd, so Monday. Okay, so let's see what happened on Monday. All right, so this is today. This area here is Tuesday, and one more back is Monday. So as you can see, on Monday, I mean, it did rally, but in the beginning of the day, stock plummeted. I mean, this candle here is scary because you see how, like, you see the size of this candle, right? It's a high of 59.73, and a low of 58.83. So that is essentially a dollar move in 1 minute, and it's bearish. Therefore, Intel is losing a dollar per share in 1 minute, which is pretty dramatic news and a pretty dramatic move. So now it did, for some reason, rally throughout the day, and we get it, right? As I said before, the stock market is irrational. So the reason it rallied, it could be a variety of things, but honestly, for people that were probably going short in the stock, when it kept going up, this probably squeezed a lot of those short sellers out of the market. So, but yeah, so I kind of want to show you that today. And then on yesterday, I mean, it pretty much chopped around. This is typical, right? I mean, it really didn't give you any good moves. a few here or there, but this is pretty much stagnant. But then today, right, and also too, moves don't always happen when the news comes out, right? So we do have a sell-off here immediately in the market on Monday. Chop here on Tuesday. But look at Wednesday though. Now we get some more decline in the stock. So do I think that this news is going to impact Intel in the long term? Probably not. As I said before, their chip sales to Apple is probably 3 to 4%, so it's not a really big deal. However, this is a point that I've been harping on for the past few videos, is that news events create a lot of volatility in a stock and great opportunities for traders to get in and make some money. So this conference happens every year. It's on the calendar. You can schedule it. You can mark it on your calendar. We know it's coming. So catalysts like this, catalysts that are earnings events, and also news events such as the Fed releasing unemployment. All of those things are predefined. They happen sometimes every month to every year. And if you pay attention to those catalysts, then you can understand and possibly profit from some of these moves. So really quick video, real simple. Hope that makes sense. I hope you understand it. I hope you got some value out of this. So thank you guys so much for watching. I really do appreciate it. If you don't mind, subscribe. If you like this content, click the like button, share with someone, and I'll see you next video. Thank you.